The economy at the moment, happy with where things are going? Signs of fragility? What do you see at the moment?
We're actually at a sweet spot. It looks like growth is fairly good, not, exceptional. Inflation remains pretty subdued. Therefore, right now, the focus has been on renewed optimism regarding reduced uncertainty after the trade agreement. Now, of course, this leaves open the question of will there be disappointments? Because I think anyone expecting that the end of the trade war means we're going back to a world of much higher trade, much higher growth, it's not in the cards.
Professor, I'll go even further. We had one guest on the programme about 40 minutes ago, an hour ago, Bob Prince of Bridgewater, who said that the boom-bust cycle was over, as we know it. What do you say back to that?
People have been saying that for centuries, not for decades.
We're back at it again.
Look, we never leave the boom-bust cycle. I love to quote Kindleberger, and he said financial crises are hardy perennials. They always come back. And look, bubbles are detected ex post. Right. So maybe next year, maybe the year after that, maybe in 5 years, we'll be talking not about the subprime bubble, but about the equity bubble, the excesses.
There's a great page, Carmen, and This Time Is Different, John, where she and Ken Rogoff go back to, I think it's the Spanish Armada, where they were saying boom bust was over.
And there's always a view that the old rules don't apply now. And that overconfidence it's really human nature.
I want to fold in a couple things here and then go to some of John's work every day looking at Europe. You took your PhD with Robert Mundell at Columbia University, incredibly important on one currency, or the experiment of the euro. Given your work with Professor Rogoff and your own work with Vince Reinhart and others, we're in a persistent, chronic, negative rate environment. Can Europe extract itself from that experiment given the currency overlay that you studied with Bob Mundell?
Yes. I think that we are getting increasing signals from the ECB.
From Sweden.
From Sweden, but even within the ECB membership, that there's a fatigue with negative rates. Don't forget, people have tended to emphasize that, well, the whole story of negative rates, it favors debtors, it favors both private debtors and public debtors. But at the same time, negative rates do take a toll on banks. They've taken a toll on banks in Europe. Disintermediation has been part of that. But also they take a toll on pensions. If you look at the interest rates at a pension, the actuarial interest rates at a pension needs to be funded, negative rates don't feel that.
You're dead on, and the key quote, John, in the panel was from Ann Richards of Fidelity, who, I love this phrase, I stole it from her. It's called actuarial hope. That nails what Carmen's talking about.
And a concept, Carmen, of the reversal rate as well, that a lot more people are talking about, whether we've taken rates down to the point where it's counterproductive. Have we?
If you look at the dot plot from the Fed, you look at a decade ago, and the lowest points are above the highest points today. So rates have gone much lower for much longer than anything we anticipated. So I don't think we can say with, we're at rock bottom, but it has that feel to it. The negative rates and the low rates were necessitated, this is motivated by a very deep, protracted financial crisis, which was over a decade ago. But we're still with that legacy.
Karen, this is so important, and you more than anyone anywhere, including in this Davos, have done the pioneering research on the history of all of this and the hope of getting ourselves out of this. The #1 mail John and I get from people is on financial repression, retirees and savers, yield people. They're getting crushed. Bill Gross says decades. When do we extract ourselves from something that's not in the textbooks you studied?
So look, I mentioned the off-balance sheet issue, the unintended consequences of low interest rates of being really hitting pensions very hard. Financial repression, consistently negative real interest rates, may not be something we exit by gradual, well-thought-out design. If you look at the consensus, including in the Bloomberg cover not that long ago, was inflation is dead. Is inflation dead?
She took a shot at Bloomberg there?
Yeah, I just did. And it had a dinosaur. It had a dinosaur to indicate inflation was to indicate inflation was dead. And what could get us out of negative rate territory would be inflation surprises. Mm-hmm. Now, I am not saying that there's any indication that that's around the corner. But what I'm saying is these exits are not always nice, gradual, and orderly. It may take surprises. We got into it by a big surprise. Remember, we weren't supposed to, advanced economies were not supposed to have financial crises.
All of economics wants to know very quickly here, when do we get the next paper from Carmen Reinhart?
Well, I'd like to talk about, very brief time, the most recent paper with is China's currency going to take over the dollar?
Well, I know you're doing a panel on that next, right?
And yes, and that's a reason
we don't want to front run that. We'd love to have you in New York to talk about renminbi, which is a mystery to all, including the president of the United States.
I think it's gotten a new wave of momentum with the resolution of the trade war.